What's the one tax strategy that could save you thousands and most people overlook? I'm sitting down with Ashley Hebert, who just became a Main Street certified tax advisor, just like me, to reveal her favorite tax saving secret. If you want to keep more money in your pocket this tax season, you don't want to miss this. Okay, Ashley. So, you're my employee. When did you come and start working for me?
November of 2024. I've been with you about 4 months now.
Awesome. And you've been doing a great job. You came on as a tax advisor as I did. What are some of your credentials?
So I have an inactive CPA license, QuickBooks Online Certified User certificate. I have degrees in accounting and finance.
And tell us a little bit about what you've been doing before you came here, because I just think this is so interesting. And this is who I try to hire. These are people who I try to hire. So tell us a little bit about what you've been doing for the last, what, 10 years?
Yeah, so once upon a time, I had different roles in accounting, such as tax prep and auditing, and even private accounting for a company. Um, but then I decided to take some time off and be with my family and follow my husband's career around. And we have lived kind of all over. We moved from Houston, Texas to Alaska, North Dakota, and we lived 5 years international in Trinidad and Tobago before coming back now to Katy.
That's awesome. I love that story. And then you guys are back here in Katy, Texas, and you were looking for something. You're kind of bored. You wanted to be able to get back into work. The kids are older now. Um, and we found each other, and that's
Yeah.
the exact type of employee I try to hire is moms who's maybe been out of work for a little bit, taking care of the kids, who have been in accounting, who know accounting, and might just be a little bit rusty. And you get to work from home. Sometimes you come into the office if you have a client meeting. But she's been in all of the tax advisor meetings, probably like 98% of them since she's been on. And then I also had her go through the same training, Mark J. Kohler's training for the Main Street Certified Tax Advisor. She just finished the program yesterday. Like, how many hours is that program? Do you happen to know, or how many tax strategies or anything?
I think they say over 70 tax strategies. I don't know how many hours. There's 12 modules, probably 5 or 6 videos per module, and maybe roughly an hour of each one. So,
Yeah.
yeah.
Awesome. So I'm just really excited now that you're done with that program. I just wanted to ask you, what is your favorite tax strategy that you either learned through the program and or you've seen me help other clients implement for their businesses?
So it's a tricky question because there's so many great ones and a lot that majority that I had never heard of before in all of my schooling and training to become a CPA. Um,
Isn't that crazy?
It is actually. It really is mind blowing. But I'd say the simplest one that most people are overlooking would be paying your kids if you have an LLC.
Okay. I'm going to try this. This is new. I'm going to whiteboard this and we're just going to talk a little bit briefly about it because it's not as simple as just paying your kids.
Right.
Okay, so I'm going to draw a trifecta. This is what everyone gets when they have a comprehensive consultation with us. It's not super great, but this is we'll get a trust going, flows down to the 1040. Okay. So there's different ways that we can pay the kids. Let's go through one example first.
Okay.
Let's just say you have an LLC, you're a single member LLC, or maybe you even have a DBA, like you don't even have an LLC yet. How do we go ahead and pay the kids there?
So you can pay your children directly from your LLC as outside labor. And so it's an expense to your business. Therefore, your net income is going to be lowered and the amount of taxes your business is paying is decreased. And then also the kids, if they're under 18, won't pay any FICA or Medicare taxes on that income that they receive. And they don't need a 1099. And they also won't have to file a tax return for that income as long as the amount of income is under the standard deduction for the year. For the federal is 15,000 in 2025. And if you're in a state that has income taxes, you want to make sure you stay under their standard deduction as well to avoid a tax return. And then what this
Awesome.
opens the door for is that your kids now have earned income. And with earned income, you can open a Roth IRA for your children now, and you can contribute up to the amount of earned income that they received in the year, or 7,000, which is the Roth IRA contribution limit.
Okay, so so here's our business. Everything on the left side of this line this is our trifecta, is your butt working to make money, right? Everything over here is your assets working to make money. And actually, paying the kids, this really can go over here on this side because, like Ashley was saying, if they're under 18, you don't have to give them a 1099. Um, there's no FICA taxes, that's Social Security and Medicare taxes. And and then what I have the kids do, and this is what I tell my clients to do, is have your kids learn budgeting. Make they need to have their own bank account. That is one stipulation. They need to have their own bank account, and you are actually paying the children for work that's legit. You need to have timesheets. They need to be doing something that's being paid at a reasonable rate that you would pay for that. But if the kid can do it, like I have a company that owns a lot of, I think they own a lot of vehicles. I think they're in pest control or something. And we're like, yes, they can go ahead and clean those vehicles once a week for you. And if there's eight of them, I mean, what, eight times 50? That could be $400 a week or something, that they could legitimately get paid for. And then just like Ashley said, once those kids have earned income, we can open up a Roth IRA for them. And that Roth, if you could say they're 10 years old and they do that for the next 60 years, that's $50,000. I think I did this for another client. I'm like, if you can just start doing this, and her kids were like 8 and 9, we figured it out, and it was $2.2 million that investment would grow to if they were able to do the 7 grand every single year, teach the kids about investing and everything, and got like an 8% return on investment. $2.2 million by the time those kids retire. Um, okay. So what happens if the kids are over 18?
So if they're over 18, you absolutely can still hire your kids and pay them through your business. You still get the benefit of um, lower net income in the business, but then you do have to 1099 the kids. They do have to file their tax returns for their earnings, but you still have that benefit of starting the Roth IRA for
Yep.
them because they are making earned income. And like Kristen just mentioned, the earlier you can get that nest egg kind of growing and doing its thing, the better. It will just continue to grow on their behalf.
Yeah. Another thing I forgot to mention, going back to the kids, is I have them pay for expenses that they would normally, so that you would normally pay for. So like the kids' clothes, or if the kids want to do extracurricular stuff, that money flows into their bank account, and then they're the ones who pay for it. So that way you are that money is literally, you're saving at least 15.3% on that money with FICA taxes that you're not having to pay by funneling it down to the kids, and the kids paying for their own stuff. Um, and again, the budgeting and the responsibility, it's really, really great. So this is one way that you can pay the kids. And this is if you have an LLC or single member LLC. Does it work if you have a partnership?
It does work if you have a partnership.
Yep.
Yes.
So if you have a 1065 form, this would work this way also. And then if you just have a DBA, this scenario works. All right, so now we're going to talk about if you have an S corp, how you would do that. So this is your trust. and we explain more of this in our comprehensive consults. But we have our 1040 over here. This is our active income. This is our passive income. So say now our business has been doing really, really well, and we switched it from an LLC all the way up to an S corp. Now, how do we go ahead and pay the kids
So
if they're
now
under
you
18?
you still can pay your under 18 kids. However, it does get a little bit more complicated, but not impossible. What you would do is whichever spouse is not the one in the S corp would open a single member LLC. That is a
Okay.
family management company.
So say the husband owns this, so now the wife under her social, we'd have to open up a family management company. Okay.
And so then the child is actually hired by the family management company. And just as before with the single member LLC, it's a deduction for the company and you pay the kid, bank account, all the things. It's exactly the same. So what happens now is the S corp hires the family management company to do the work the kid is doing. So in the example where the kids are washing vehicles, the S corp has an expense to the family management company for the maintenance of the vehicles or the car washing of the vehicles. And the family management company receives that income from the S corp and then turn around for the same amount is paying the kid the amount of that labor. So the family management company effectively has no income. It zeroes out. So you're not paying any additional taxes for doing the family management company. And you're still paying the kids and they're still getting all the benefits.
Yeah. So like say it ends up being we pay a management fee to the family management company for 7K, and then we pay the kid over here 7K. Sometimes like in my bank account I have bank fees, so I have to pay an $8 bank fee every single month, but still,
Right.
so maybe there's a bank fee here or something, but ultimately we're having zero income. We're going to get this to zero or as close to zero as possible for that when the we do have to do a Schedule C on the personal tax return for the family management company for, say, the wife, and these can be switched around. But we're going to get that down to zero for that. There's no taxes paid on this. And then everything basically goes out to the kid or to like bank fees or something. And then again, as long as the kid's under 18, um, and it's under the the 15,000 standard deduction for federal, or if you're in a state that has state income tax. We're in Texas, so we don't have to deal with that. But we do have to, if you're in another state, we do have to look to see what the standard deduction is for your state. Otherwise, we may have to do a tax return for the state. Um, and then this is called outside labor. On like on the tax return, outside labor to pay the kid or kids. And then like I said before, I always have them start paying for their own stuff, and then I put half of it away into their Roth. Um like that's the strategy I do, and I kind of like if I kind of like recommend to my clients, like if they want to do something like that, that's fine. Um okay. So this is if we have an S corp. What happens if it's a single person and they have an S corp?
So they can have, I don't know, Kristen. What do they do?
They're kind of I mean kind of SOL. Like,
Yeah, okay. Because I was at first I went to grandparent. I was like, no, it has to be the direct parent to do it.
yep, yeah, because only the parents, only companies where you are the owner and not like a shareholder like an S corp can you have kids. And there's a law that if they're under 18, they don't have to pay social security and medicare taxes.
Right.
But like if you're divorced or single or widowed and you don't have that spouse, the other option to be like you can still hire the kids, but you would have to pay them directly out of here, and they would be a 1099 or a W-2. But you're not going to be saving that FICA tax. Like there's not really another option around that unless you're very amicable with, say, your ex, and they're willing to do this and willing to do this extra work on their tax return. If they're not, like there's no workaround about it. Okay, So this is if they're under 18, a workaround. If you have an S corp. What about if the kids are over 18?
So if you have an S corp and your kids are over 18, then you eliminate the need of the family management company altogether and you pay them directly from the S corp. And yeah, and then it's reported on their W-2 or 1099, depending on
Yep,
the type of work. And then same, they have earned income to start their Roth.
perfect. Did we miss anything? Like, is there anything else that we need to talk about? Like, I think we got both of the scenarios
No, I think
covered.
if they have more questions, they schedule a call.
That's a great segue. If this was interesting to you and you want to learn more about this, like book a discovery call with us and actually have two other videos that I talked about this probably 6 months ago, and we'll put the links below, but there it's called paying your family members. And it goes into paying if you have a spouse you want to put on payroll, if you're taking care of like your parents, you want to put them on payroll, and then also the kids is on there, both under 18 and over 18. And we just thank you so much for staying with us today. If this was interesting to you and you want to stay on our notifications, please go ahead and hit the little bell for the notifications, subscribe to our account, and go ahead and put comments of what you would like to see coming up next for topics. And we would love we would love your input on that. Thank you.
Thank you.